welcome to the video today. It's the 18th of December, Monday. We're going to be looking at USD against the JPY. Now, in terms of this pair, we do have a high impact news event coming up tomorrow, which is the Bank of Japan. Now, in terms of recent action in USD JPY, we see a really big sell-off to the downside. It's been a volatile pair, and we're now starting to firm up a little bit. Now, my own view on this pair is longer term. USD is going a long way to the downside, but in the short term we are going to see a significant bounce. Okay, I'll go through my levels of entry, stop and target in a moment. First of all, I want to go through my logic of wanting to be long of the USD. Bank of Japan tomorrow, no policy change expected, but the big question is, when will the Bank of Japan end negative interest rates? Now, will they give any clues tomorrow? I don't think that they're going to. I think they'll just say that wage inflation, which they're focused on, is not where they want it yet. They're looking at data closely, etc., but give no firm hints. I just feel that's what they're going to do. Now, is that enough to rally the USD? I think it is, because if we look at, obviously Japan, they will have to go down negative rates, okay, but it's not going to be just yet, probably spring of next year or something like that. But what about the outlook for US rates? Now, if we go here, we can see the market is seeing a very dovish Fed. You can see rate hikes and cuts priced on the 20th of September v the 13th of December. In October, they were seeing some raises and then a gentle decline in rates. But today, look at that, they're really dovish. We're seeing a really dovish Fed. Let's look at this pricing here. The market sees 150 BPS in cuts via the Fed dot plot, which is just 75 basis point. The Fed dot plot is the Fed members' views of where interest rates could go. So my own view is, if there's no shock in terms of Bank of Japan being pretty specific of where interest rates might go in Japan in the future, I just think the dollar will rally. Dollar oversold in terms of interest rate perceptions in the US, and it's technically oversold as well. And the technical setup we're going to look at is one of our favorites. Let's go and take a look at levels of entry, stop and target. All right, USD JPY, just using the chart from our member center, you can see my levels. I'll go through the logic of why I've picked them out in a moment, but if you want to see all our research, fundamentals, sentiment, and also our levels on a daily basis on 14 FX pairs, and join our member center on the link beneath this video. You can also follow us on Facebook and join our Facebook group of traders. Now, in terms of this one, we did have a short trade in at 145.30, which we decided to take out today. And we now want to go long at 143.20, 141.80, stop, target 146. So we're looking for 280 pips on the upside. Now, what I'm going to do is I'm going to the levels on this chart. It's probably a bit easier for me to explain the trade if I draw the levels from fresh. Now, in terms of 146, we have a rally there on the blues. We fall hard on this big red candle and we follow through, but we finish off the low of the day. Next day, tail, doesn't get to tail, we finish blue. I was thinking maybe we'll sell off a little bit more into the Bank of Japan. We didn't, and we started to firm. So I think, basically we can swing trade long. I think on this candle here and this candle here, you had a lot of shorts come in late with tight stops, and they could well get hit on stop. Okay, so what we have is effectively 3 lower lows. For the stop, we've got a round number here, 2 bodies just beneath it. That tail only just got through it. We're blue today, So that's good enough for the stop in our view. There is the 143 level. We're just coming through it now, so we need another 18 pips to get long. Then we're looking for a correction of oversold up to 146, where you got two bodies and, sorry if I can draw my line straight, two bodies and the tail of the big red. Now I'm hoping if we do get triggered and after the Bank of Japan we continue to the upside, we can get our stop up pretty quickly. So if we don't reach our target, we can reduce our risk. Now, in terms of highly volatile moves, you can see the volatility on the outer Bollinger Bands, the orange lines. When you get really high volatility moves to the upside or downside, you'll very often revert to the mean price, which is the mid Bollinger, which is the green line. That is dynamic and will come down, but just behind the 146 level at this moment in time. Now, in terms of this trade, we're already looking to get into it before the Bank of Japan. Should you do that, or should you wait for the actual meeting itself to respond to the price action? Normally we want to be in advance, have our order in. If we're wrong, we're wrong. I find very often when I used to trade the price action, after the event, I'd either miss the move, get the wrong entry, etc. So I just feel that it's better to put your levels in or your order in advance, but it's a personal preference. If our logic is correct, hopefully we will get to 146. We'll obviously see how we go. The market will obviously prove us right or wrong, but I think it's a decent risk to reward, and I think the probability, if we have a nice blue candle after the Bank of Japan of continuation to the upside, is on the cards. There's too many yen bears in the short term, okay? So I think you've got to have a flush out of weak shorts. We shall see. But that is the video for today. Thank you for watching it.